Hi, I'm John Kingston. I was on FreightWaves Now yesterday and I started out by saying, boy, what a difference a day makes. You know what? I can say the same thing again today because let's review it. It's Thursday now. On Tuesday, the Saudis said we're going to make all of our contractual agreements. We're going to fulfill all of them. Our production is half back from the bombings over the weekend. The market took that and sold off. Yesterday, it continued to sell off. Today, overnight, it's almost like the market looked at everything and said, you know what, maybe we don't want to take all this at face value, and prices have risen, anywhere about 2%, 1.5% to 2% overnight and into Thursday. I think what people are starting to think is, okay, maybe they can meet all their contractual requirements, but how much of that is going to come out of inventory? They have storage all over the world, the Saudis do. There were reports that have been denied, but I'm going to give them a lot of credence that the Saudis were turning to Iraq to buy some of Iraqi oil so they could meet the Saudi contractual commitments. Of course, that's not new oil, that's just transferring barrels around. So the reports continue to be that some of the facilities at the processing center on the Saudi coast are going to need like 2 months to really come back full. And so the big question out there is, even if the Saudis bring their half of their lost production back, remember they lost about 5.7 million barrels a day, so even if they come back about half of that, that still leaves the market short about 2.5 million barrels a day from what they were producing before that. That's a pretty big number. You start to draw down inventories as a result of that, and maybe you get by the time it's November or December, and inventories around the world have really tightened. Now, let's remember that looking at the supply-demand forecast going to next year, the world was looking at a significant glut of crude. So in some ways, tightening up the inventories might not be bad for the producers like Saudi Arabia, not necessarily good for the consumers. Let's talk about the consumers. The price of diesel at the pump and at the wholesale level did shoot up on Monday. Tuesday kind of came down a little bit. It continued to come down. Atlanta is a very good market to look at. It's a real regional hub for the whole Southeast. You can see that the wholesale price on average went up to well over $210 and dropped down to $202 yesterday. This is data in Sonar. The wholesale price is a leading indicator. The retail price will usually eventually key off of that. So I think that this thing could go up again, but that big kind of sell-off that after we saw Tuesday, we thought, well, maybe we'll keep going down. Right now, that's taking a breather. The reality is that the commodity diesel price is about 10 cents above where it was last Friday, which was the last day before the attacks. The price of crude is now, I'd say, maybe $4.50 to $5 above where it was before the attack. So we're still significantly above that. It's going to be interesting to see what the DOE, EIA retail diesel price is going to be. The survey is going to be of all these stations that were raising their prices, cutting their prices, just a wild, wild market. I don't even know where to predict that thing's going to be next Monday, but it's obviously a very important number because it's the basis for fuel surcharges. So keep watching FreightWaves Now, keep reading FreightWaves, and we'll cover all of this. Thank you.